What I wanted to do today was really focus on a single signal, which is the BR, or bottle rocket signal, and it's simply because current market conditions are favoring it. And this is a crude oil. We'll look at several different markets. So this is just a blank chart. But what I really wanted to get into here, because we're going to be looking at very stripped down charts, I'm going to bring this little sheet in here. And this is just out of the trade plan. And one of the things I say that I feel pretty strongly about is this little right up here. Do not trade these signals blindly. And listed here is the confirming factors that I use. And I really just want to take a second to go through these because you're not going to see any of them on the charts. Structure, fifth wave completion, ABC retracement, 1-2-1-2 pattern, bullish bearish wedge reversal patterns, double top, double bottoms with a long string of SAR dots. You will be seeing the SAR dots. 7-8 retracement zone, head and shoulders, inverse head and shoulders, third bar of a 3-bar buy sell pattern or shortly thereafter. Signal is with the higher trend. I mostly use a 200 and 600 for that. Price action made it to a strong support resistance zone. I'm a big fan of the multi-time frame DBTLs and double DLts, and these, particularly when these higher time frame EMAs get involved with those. The FT and a trigger, it's part of the package. It's just another trend confirmation tool. Proximity and direction of key moving averages, 600, 200, 89, and the 50 is what I use. Proximity and direction of 24-hour VWAP on crude oil. Proximity to the 50% internal fib and half gap lines. Stock index futures, I say only, although recently I've seen gold responding pretty good to those. Proximity of BR signal to the SAR FAR XO vertical line. We will be looking at this today. And I make a note here, this can be set as a filter in the program. And a little underlined, signals close to the line are higher rated. Immediately following a successful SQ or ZR, so you won't be seeing that today. Late in the squeeze signals, you will see that. These are breakout signals. And I also like to run an exhaustion 1 indicator on a 15 range bar chart. That is a little higher time frame. So I've got positive CFs. And Jerry, I'm going to ask your comment on something. Let me go through these negative ones real quick. Negative, I call them the nowhere to go rule, and that's just a term I made up, and that's just simply using caution if your trade entry will just send it immediately into a strong support resistance zone. So I just call that the nowhere to go rule. Use caution when market impulses between the FAR SAR XO line and the first BR. Best not to take BR signals as market may do a 50% retracement. And a little note here, highest rated entries are close to the FAR SAR line XO. You'll see that. Cancel order if opposite FAR SAR XO line forms. Don't trade against a double top or triple top or bottom. And don't take BR signals in a very narrow squeeze or early in the squeeze. So even if not trading the SQ, ZR signals, they can be used for pretty good confirmational factors. And Jerry, the part that I wanted your comment on is going to be right after I make this statement. It's been my experience that I like to get as many good, strong, positive CFs as I can, but I don't think I've ever taken a trade where I don't have at least one of these negative CFs lurking about. And I have heard Jerry to very loosely paraphrase this, say something on the order of we have a higher time frame double bottom, we've got an inverse head and shoulder 3-bar buy pattern, really good setup, but we do have one little challenge here with this left shoulder pivot we got to get past. So Jerry, I'd like you to comment on positive and negative CFs if you don't mind.
Yeah, you bet, Dave. Just want to make sure that my audio is active. You guys I coming through?
I hear you.
Okay, good. Thanks. Yeah, if I were to just to summarize it, another way of saying it is there's no such thing as a perfect trade. There is always, no matter how high rated a trade may get, there's always some challenge. In fact, there's normally more than one challenge. And that's the way we should enter a trade. We should be identifying the positives, meaning that that's the whole justification for taking the trade. But at the same time, we've got to clearly identify the negatives as well, so we're able to do two things. Number one, know what has to be done for continuation, meaning a trade must overcome X, Y, Z, or A, B, C, or 1, 2, 3 to get follow through. And number two, for proper trade sizing, trade allocation. We are currently in a mode and have been in a mode for several weeks now, if not several months, where we've been identifying or rating the trades as discretionary, DSC, and hopefully we'll get back to the normal environment. And a lot of that is volatility changes. One, for 3 or 4 days will be extremely volatile, and like here now, we've been in an extended consolidation now for 4 or 5 days or more. So we're getting this really crazy environment, and that's why we stayed with discretionary. But at any rate, once we get back to a standard rating or normal rating, we'll have the AO and standard, aggressive only and standard, and that's what that trade setup rating is all about. So we can properly evaluate risk, and we can properly allocate trade sizing, meaning, are we going to do 3 contracts or 5 contracts? Are we going to do 2 contracts or 4? That kind of thing, because going right along with that same concept is not all trade setups are created equal. Some are better than others, and that again, or there again, that's what this is all about, outlining and clearly identifying the positives, but at the same time outlining and clearly identifying the negatives. In clearly identifying the positives, and just because there's 10 positives and maybe 1 or 2 negatives doesn't mean that it's the highest rated trade possible. But that's another story or another topic for another time. At any rate, I hope that helps out. Dave, back over to you.
I appreciate that, Jerry. As you can see, the chart you're looking at happens to be a crude oil. Like I say, we'll look at several charts, but I wanted to start with a true blank chart, and I'm actually going to get rid of that crosshair. What I want to do here is put on the BR signals, but I want to put all of them on, because a BR signal, if you look at this little green bar with this long wick, and that's why they thought it looked like a bottle rocket, so they gave it the label BR. It could have been a dot marker for all that matters. But anytime you see a wick, no matter how small, that's a possible area where a BR signal could form. And the reason I want to put that on, let me just go to that and get that done. Scroll down to where the BR signals are. And right now it says show BR signals false. I'm just going to set that to true. And they're everywhere. So, and the reason I talked about CFs is because there's a lot of little CFs that we can build into these before we ever get a BR. I don't list them in the trade plan as a CF because it's already built into the signal. So let me get rid of this chart and bring on another one. We're looking at exactly the same chart, except this time I said let's go ahead and show we've got this short-term trend signal, and that's the SAR cross. It crossed the little cyan dots. and there's our first BR. And in fact, I said in the BR section, only show one signal per cross, and that's it. So there could have been other signals, in the same direction, but I just said just show the first one. It's really what I wanted to concentrate on. And you notice there's no support and resistance zones, there's no moving averages, there's none of that stuff. But I just wanted to basically just kind of scroll through and just give you an idea of how this whole concept of a first BR. And you're going to notice some of them are really nice winners and some not so much, but some of these ones that don't do too much. This is where some of these other CFs would come into play. But you'll also notice it's a pretty simple system. The red and the green lines do have an audio alert, so they will say signal, crude oil, trend change, or however you set up your alert. And then you just wait for the BR signal. And there's an example on this particular screen, so I'm going to use my ellipse tool. And I just want to do a little something here. I'm going to circle that one, and I'm going to circle that one. In the trade plan, I talk about how you have to handle an early entry BR. And this is the early entry right here. And I define it as, you notice there was not a bar of opposite color next to it. Take a look at this BR. So it's a long BR with a green bar, but we've got a red bar right next to it. So that's a standard entry. This is an early entry. But as we go through this, you're going to notice, and here's just really a prototype trade where we get the signal, we pull back close to these SAR dots, but we didn't close past it to trigger a down, and so those tend to be nice and high rated. One of the things to point out here, usually this background here is the squeeze background. But notice I'm not showing any Bollinger Bands, nothing, no signals. It's just the background. But useful to know that the signals of a trending nature, like a BR signal, they can struggle a little bit. Now, when I see a little gap like this, and then I see a squeeze starting again, in my mind, I'm kind of just extending that over. And what I look for is, later in the process, it's got to break out. And so here's the breakout trade. I particularly like these when they get close to these dots. In this case, the cyan dots. And that is called the FAR line in this setup. There is a second SAR available within the indicator. You can set up for different settings. They call it the near line. I'm not showing that, but both of them make nice places to trail with. In that I want to look at a lot of charts, and we're just going through all kinds of different times of day. I've only got 5 days of data here, as we want to just take a scroll through. And obviously, this is what I'm talking about, this early entry right here. And without that, the first signal would have been way up here. Now, when I trade, I like to also invoke a filter that says, hey, after about 30 bars or so, I don't want to see any signals. And it depends on the chart size. But here again is that, just got into a squeeze, got a BR, didn't turn out so well. So that just gives you an idea of, what these BRs look like. And you can sure see when the market's more range bound, one way to tell is you're getting a lot of these short-term trend change. You see a whole lot of these red and green lines. When things are more trending, those lines tend to be farther apart. So that's crude oil. And what I want to give you a sense of is we're just going to change markets. And we're on the 6A, the Aussie. In other words, you don't have to change your whole setup. So still looks the same. And as we go through these markets, you're going to notice that, your charts don't look They're all the same. And that's the whole idea. Now, this is a good example of, should I take the early entry signals or should I just have some kind of a pullback? And that's a choice within the program. Right now I've got it set up for early entry because I'm really focusing on, the first possible BR signal after the short-term trend change. So this is not a market that I trade, but I just wanted to show several markets. So that's the 6A. And we'll go to the next one. Good old 6B. Some of these markets that we're going to look at, I might change the time frame a little bit. Now you look at this whole down run. Well, geez, we got the downtrend signal, and there it was. Now, a negative CF. Yeah, it's our first signal in the squeeze. But believe me, with all the other tools and things, we might have had a very nice looking resistance zone up there, giving us a reason for that to come down. And if I didn't, I wouldn't take it. Now again, that's as far a pullback as you can get. That little wick actually went past these SAR dots, but notice it never closed past them. So that stayed intact. Had that bar closed at that bottom of that wick, we would have had a red line, vertical line down. So some nice runs on that. Of course, what I'm also seeing here, these are the Europeans doing this, the European session. But now you look at, geez, no signals, no signals, no signals, but look at the distance between the red line and the green line. It stayed in a downtrend for a long time. It never could penetrate these little dots. And by the way, you can change the setting on these dots. I'm using the same one just for demonstration purposes. But that's just a completely different look at a market. But surprisingly, they all start looking the same. Let's look at the euro. So, nice down move there. Nice, not a huge trade, but a profitable trade. And notice 1, 2, 3, 4, 5 waves up. Red vertical short-term trend down. Here we go coming down. So we had structure. We had structure on that one. And again, here we are at 8:41 in the morning. Nice run down on that one. Got into a squeeze here, so I had to slow down a little bit. Here's your typical end of squeeze BR signal. There's the beginning of the squeeze BR signal. Compare how they did. And same thing here. Beginning of squeeze BR, end of squeeze BR. Now, in real time, how do you know it's the end of the squeeze? You don't. Well, what I look for is movement. In other words, I see green bars, red bars, green bars. I see movement within this thing. Once it's made some movement, then I know, okay, it's done its thing. It just can't move higher. It can't quite move lower yet. It's got to break some way. Well, we got a clue. It broke through the SAR dots. We got this little BR signal here. But notice, without the early entry, you wouldn't get a signal till way down here. So do I see value in the early entry ones? Yes, I do. Let me say, and I have to go to a crosshair cursor, in the trade plan, one, to me, negative about taking these early entry BRs is stop management. And what I've said in the trade plan is if you're gonna get in, I usually get in one tick below the signal bar. But on these early entries, you're not going to see all these dots. You're going to see a few dots. But what I say is 2 dots back. So that's one. That's on the dot. 2 dots back for the stop, which is a big stop. So one thing to consider with these is, am I willing to increase my stop to take this early entry? And the reason you're doing that is if it does pulls back and gives you a more standard entry. And we might get a chance to see an example of that. But this is the 6E. It seems to be doing okay on this particular chart setup. You know, when you look at, yeah, here we go. Here's early entry. We did get a pullback. It didn't quite come to the dots, but what I want to guard against is this thing coming, you know, piercing through this dot. And I have back tested this, and if I stay 2 dots back when I get in, but I survive about 95% of these little pullbacks on these early BR signals. So just something to consider there again, right here. If your early BR signal, you're doing a typical 10-tick stop like I would do on this, I just get stopped out. So I do tend to get that little bigger stop and move it along. Now, as soon as I see this bar close, this red bar close, then I'm going to trail on the dots. So it might have got stopped out there. So very important to have that small target one. So that is the 6E. Let's see if we, no, I don't want to mess around with the 6J. Oh, we got crude oil, and we already looked at that. So we're going to bypass that one. And a market that I kind of like, the EMD. You know, Jerry's made the comment to me, anyway, that the EMD is very directional. Because of the lower volume, there is a little more slippage, so just keep that in mind. Used to be the EMD would pretty consistently trade 30,000 contracts a day. Wasn't, you know, too bad a slippage problem. It's not quite there. It really gets some beautiful moves. You know, when I compare it to the Russell, you know, the moves are just very directional in the EMD. So that, and I've shown the EMD before, and this is what I mean about these directional moves. It just goes like a bullet. I've got to believe if that same move with the Russell would have larger pullbacks in that same move. In terms of the number of ticks of the move, in general, I will say the EMD moves a little bit more than the Russell, but not always. But they're pretty close. But in general, the EMD, you get a little bit more movement per trade. So that's EMD. We're going to look at the ES, and we are going to make a change. One thing, just to look real quick here, you know, it's not bad. Okay, that's a 4-1. But just one thing I wanted to point out, and we'll do this on one of the other markets, the smallest chart you can run with this Renko system is a 2-1. And the reason I want to say that is it just depends. You know, are you looking for a lot of big trades, or do you want to, you know, just do 4 and 6 ticks and have a lot of little 4 and 6 tick trades? Again, we're not doing too good in the squeeze. And by the way, on a little chart like this, one thing you can invoke with these BR signals is to simply check true to the statement in the BR section that says, don't show any signals in the squeeze, and all of these would disappear. But that's a little 2-1 chart, so it looks very busy, of course. So it just depends on your approach, you know, in terms of how you would want to, you know, are you going to go for the big trades, or do you want to go for, you know, more smaller trades? Now, obviously, a signal like that, you know, it's nice to trade the dots, and it did well. The other market, and I'm going to jump around a little bit here, and I don't know if any of you have considered trading silver. 25 ticks, 25 bucks a tick. So 25, 25, 25, 25. But this is the little 2-1 chart on silver. And, you know, two contracts, 4 ticks. And you get a lot of winners on silver. So it's just a neat little market to trade, small contracts. It kind of makes it worth scalping. And the beautiful part of this, on a 2-1 chart, you're on a standard entry, you're running a 6-tick stop. So you got very little risk. And, if you trade it with a 4 ticks and a runner, the risk to reward can be very nice on that market. We're going to back up a little bit, and we'll take a look at the DAX. And this is going to look a little strange because I got to change it from a 2-1. Although just for kicks, it isn't too bad on a 2-1. That isn't all too terrible. Typically on the DAX, just the way it moves, I look at it on a 5-1. So that's the difference. That's a 5-1. So not near as many signals, particularly when we're only seeing one. But this is the difference. On the 5-1, we got one signal. On the 2-1, we probably would have had a whole trend change here and another signal, and another signal, and another signal. So it really depends on how you want to approach that. Well, let's take a look at gold, and I am going to change that a little bit. Not much. Just do a 4-1, and then here is the same signal set up on gold. Again, here, this squeeze signal. We got in the squeeze. Geez, it's a first BR in the squeeze. Okay, that's a negative CF. But a very large positive CF is this price coming as far as it could possibly come with this average true range row of dots here. Big long row. That is a very strong CF, I can tell you that. There's our early entry. This down here would have been the standard entry. I want to get rid of that crosshair cursor. Here's an early entry. We would have had nothing on that whole run. Would have missed that entire trade. So that's why I put the early entries in, just so you can see the difference. Again, you can see that pullback came pretty close to those dots, worked out very well. This one came pretty close, not so great, but I suspect we would have had some indications that we were favoring a downtrend. Typically, I'm very cautious about taking these trending signals counter trend. So something to keep in mind. If I'm going to take a signal like this that at that point in time would be counter trend, I better have a lot of positive CFs telling me that's a good reason to take that trade. Sometimes I will put on my trade setups, I will ask it to give me 2 or 3 signals, because I don't know if you notice what we got right there. We got what I believe is Jerry's all-time favorite pattern, a 1-2-1-2. So if you do, and if you got in here, you'd be fine. Trailing these dots, you'd recognize after the fact it was a 1-2-1-2, but you're already in. But that's a 1-2-1-2 pattern as it shows up on this bar type. Again, here is something going on here. I'm seeing a head and shoulders 3-bar sell pattern with a BR signal on the 3rd bar. So there's some structure right there. Would I be wanting to go long? Well, maybe, depends. Probably not. Looks like I had a pretty strong bias to the downside here. So what this is, from this green to the red, it's just a reset. We're in a downtrend. It had a pullback. We got a reset. Okay, now we're going down. We're still going down. We're still biased to the downside. But you can see, we went down. Even this signal, you made some money on that one. This is a good example, this signal here, of why you have a 5-tick target 1. So you made your 5 ticks. Maybe you made a little bit more. I usually will begin my trail on what I call my hash marks or a closer line, but it depends what was down here. If I had some major support area down here, you know, I'm going to trail it very, very closely. So some of these signals not going very far, some do better. So here's our same pattern again, but boy, we had lots of suggestions over here that we just didn't really want to move lower. Finally, we went up. So, you know, is this peak right here a double top or a 786 retracement? Don't know right offhand, but it's pretty close to one of those two. So that gave a little bit of structural support here. And gold has been kind of stuck for a while. It hasn't been moving well. That's why I show it on a 4-1 chart. It just shows a lot of opportunity. You know, that there, by the way, would have been, if you had two signals, to show two signals, that would be your second signal right there. Now, certainly we all would like every trade to be a move like that, but probably not going to happen that way ever. Here's an example of the early entry signal and how you got to protect yourself from this little pullback right here. And that's why I initially go 2 dots back. So I'd be up in here, and I'm just kind of following this down, watching this come up as it's getting closer and closer. And I try to stay off that line because I know that that thing can penetrate one tick beyond it and still be a downtrend. So that's gold. And not sure if natural gas has woken up yet. Let's see. No, some activity on this chart. What I'm noticing here, my slider bar is quite large. So on a 5 days worth of data, I can see there's not that much price movement. There's some. And I would expect natural gas to pick up the pace as the weather gets colder. And next is the NASDAQ. See how much smaller the slider bar is? So that tells me instantly, oh, we've had a lot more price movement because these bars are purely by price movement. So we're still on this little 4-1. We'll take a look at it. I would probably look at this more on a 5-1 just due to the price movement. It's a little noisy on the 4-1. Let's just change that real quick, see if it looks better. So here's a 5-1. Yeah, it looks a little better. And just the same setup. It's a universal setup, any market, any time frame. Now, I will say if you start getting into very large time frames, you know, a 10-5, a 12-4, you're not going to see many signals. And the problem is you have to have such a big stop that, you know, when you get stopped out, it hurts. You know. Of course, that nice little signal all the way down, you know, that was a beauty. Nice little end of day move. So there's NASDAQ. I know I'm going kind of fast through this, but I just want you to get kind of a feel for what happens with some of these first BR signals and the movement that comes after them. You know, this is an example of we're just in and out of the squeeze. When I start to see that, you know, I almost connect the dots and say, oh, we're still in a squeeze, even though it's not in a squeeze here. No, we're still in a squeeze. We're just not breaking out. We're just not breaking out. And that's when I really start looking for higher time frame charts in terms of what is the higher time frame trend. You know, what direction might we break out in? And again, you know, and here's a perfect example of this early entry. You know, in this case, would say, I wish I didn't have the early entry. I'd rather have this one. But early entry, you just have to protect your stop, and just keep it a couple dots back until this thing gets moving. Once it gets moving, you can trail on the dots or trail on the hash line. But that's what you're guarding against if you're going to use the early entry. You know, no bar of opposite color. This one, not so big a factor. You know, it pulled back a little bit, but it got moving before it pulled back. Here's another one. Early entry, pulled back immediately. You know, I will say with these early entry BRs, you have to be fast on the mouse. Sometimes they will come very quickly. Now you do get an audio alert when this trend change happens, but sometimes this BR signal will come, you know, a bar or two after that. And of course the entry guide will show you, you're going to decide how far off the signal bar you want to get in. I usually do 1 tick off that, and the reason I do that is because I want to make sure that that signal bar actually closes. You'd be surprised how many times you get the warning BR signal. It goes all the way up here and then comes all the way back and closes and fails. And so the warning never becomes a confirmed signal. But you get a warning and a signal audio. And so that's why I like to put my entry not at the close of the signal bar, but at least 1 tick. And you can do 2 or 3 ticks, whatever you're comfortable with. So that is the NASDAQ. If we've run out of markets here, we looked at that one. No, we haven't looked at the Russell yet. The Russell, actually I've been having some very good success with the 4-1, just the way it has moved. And take a look at that. And now see, this BR signal came after we broke out of the squeeze, so that's kind of nice. That's another little confirming factor. We've already broken out of the squeeze to the higher side. This signal came a little late, but still had a winning trade. The signal was closer to the vertical line. That to me is important. Just the relative closeness. So that's another confirming factor. How close did that signal appear to the line? You never know, how far this thing is going to move. Here's this other confirming factor. It went right to the dots. It went 1 tick past it, but could not close. So it's like a little support, in this case, resistance zone. It held, and your order, while it was doing all this, and you're getting this warning BR signal, your order's way down here. So if it went up here and closed, you'd get a green, uptrend start. You just cancel your order. So that is the Russell. And again, you notice I got a fairly small cursor bar down here. So we got some pretty good movement. And believe it or not, that's one of the ways I size my charts. If I bring a chart up and I've got this huge wide bar, I know my chart size is too big to get some proper movement. Very, very similar to all these other charts we're looking at. Well, let's take a look. Are there any others? The YM, I don't know if there's any YM traders out there. But again, take a look at the cursor. I've got a fairly small cursor, so there's movement. In other words, there's enough bars on the chart to force a small cursor. And here we go. Here's this early BR signal. Notice it came all the way back to the dots. That's why I do not put my stop on the dot when I'm in this situation, because I know that thing can come 1 tick past that and still take off. So I'm actually, I like to be 2 dots back until this thing gets going. So just keep that in mind in terms of are you really willing to have that large a stop. This one here, standard entry, well, I'd be stopped at. But I'd probably look to get back in whether I had a signal or not, because the darn price went to right to the dots. This early signal, you'd done the dot program. Your stop would be down here a little bit, but it finally took off. Now you can either trail the dots or the hashes. Hash lines would be a little closer. So same The same, it just doesn't seem to make any difference what market we look at, you know, the same principle. And you know, Jerry really stressed to me several years back. He had an indicator that was based differently. I believe it was based on a channel and an EMA crossover. So I was using that, and that's actually how I came up with this. This is ATR based. But what I can do with this, I can filter my signals. You know, I can tell the program only show me BRs or any of the other signals in the direction of that trend. And you can see things got a little congested, how close together these are. You know, I had a nice move very far apart from the red to the green. You know, I'm not sure. Oh, yes, there are. Let's take a look at bonds. And here's what I'm talking about. Take a look at this slider bar. It's huge. It was telling me that, okay, there's not that much movement price-wise in bonds. You know, does it look any better if we drop down to a 2-1? Well, it's still a pretty darn big bar. However, you know, there's some possibility here on this little 2-1 chart. And again, the beautiful part of the 2-1 chart, you're using a very small 6-tick stop. So that's what bonds look like on that setup on a little tiny chart. We'll go over to notes. And let's see what we have there. Oh, that's even worse. My slider is huge on a 2-1 chart. So that's telling me instantly that we're not having a tremendous amount of movement in notes. But if you are a dedicated notes trader, you still have some opportunity with these little small charts. And by the way, the yellow dot, dot, dot is the session break line. And you can see, you know, that's a whole day right there. But in that day, we had one signal that went a little bit up to here, a second signal that you were struggling, and a third signal that was a home run. So it doesn't take very long to scroll through that market. And I think there is one more. Yeah, beans. Okay, we got a little shorter slider bar here. I'm just going to take a quick peek. See, that's looking a little busy. Well, let's bump up a little bit. I'm only going to bump up to a 3-1 just because I want to check and see what that looks like. We're sizing a chart right now. Okay, see the slider bar is getting pretty big. That's 5 days of data. So let's take a look at a 3-1 and see, is that giving us some opportunity? Well, it sure doesn't take very long to get through 5 days. But again, I got some pretty decent signals. You know, how do you avoid getting into, you know, this one? Well, that's where all these other CFs come into play. So that is the last market I wanted to go through, and I'll just kind of end on the crude oil market, which seems to be a favorite amongst everyone. And Jerry, if you are there, that's what I wanted to get done today.